Welcome to Tax on Web tutorial video series where we will break down the complications of Canadian tax rule. TOSI rules. Tax on split income. TOSI rules were created to stop people from shifting income to a family member who don't actually contribute to the business. If that happened, the income get taxed at a higher possible rate. Not ideal, right? But not every dividend falls under TOSI. Let's talk about what happens when dividends goes to a spouse or family member with some simple examples. It's a very common situation. Dividend paid to a spouse. One of the most common question about TOSI is whether it applies to dividend paid to spouse or not. Here is a good news. Generally, TOSI does not apply to dividend paid to a spouse. This exemption exists because the Canadian tax system views spouse as a single economic unit. Income splitting between spouse is generally permitted for tax purposes. However, there are a few caveats to keep in mind. The business paying the dividend must be owned and operated either by you or your spouse. Additionally, the income your spouse receives must be considered reasonable in relation to their contribution to the business. Our second example, dividend to adult children active in a family business. Now, what about paying dividends to your adult children who work in a family business? In this case, let's look at children 1 who is 25 and work an average of 20 hours per week, and child 2 who is 20 and also work 20 hours a week. Both kids are actively engaged in the business, which means their dividend will be considered excluded amounts. So no TOSI here. Our third example is dividend to spouse who guarantee a loan. Here is another interesting example. What if the spouse does not work in the business but guarantee a loan for the company? In this case, spouse B guarantee a loan that is secured by their home, which helps keep the business running even though spouse B isn't actively involved in day-to-day operations. They take an financial risk by guaranteeing the loan. Since spouse B is taking that risk, any dividend that will be treated as a reasonable return and won't be subject to a TOSI. Additionally, if the guarantee is for tax avoidance, TOSI could be applied. Proper documentation is essential. Now, dividends to a full-time students. Now let's switch to a younger adult under 25 who don't work as much in the family business. Take a grandchild, 1, who is 19 and only work 1 day a week. Even though they get a dividend that's the same as full-time worker, the income will be subjected to TOSI. Do you know why? Because they aren't working regularly enough in the business to be considered actively engaged. Without regular work or financial contribution, the dividend is seen as a split income and get hit with the higher TOSI tax rate. Last but not least, dividend to a part-time worker. In a similar case, child is 20 and work only during the summer. But they put in full-time hours for a few months. Even the child works 600 hours in a total, the dividend they receive is still considered split income because their work doesn't meet the average of 20 hours per week across the full year. So even if you work hard for the part of the year, the TOSI rules still look at your total average for the year. As you can see, whether or not TOSI applies to a dividend depend on who's getting the income and their involvements in the business. If someone is actively contributing, their dividends are usually safe, but if not, TOSI can step in and increase the tax burden. That's all for our today's tutorial. If you found this video helpful, give a thumbs up and don't forget to subscribe for more helpful tutorials. We will see you in the next video. Thank you for watching.